good afternoon. Thank you for joining us here on this Thursday. You're watching Your Trades with me, Navedna Prabhu, and joining me is my co-anchor, Snehisha.
Well, yes, this is a show where we'll be taking you through everything that conspired over the course of the trading session, give you a lowdown of the market session we saw today, and bring on board our expert to talk about what we can expect in tomorrow's market session. But let's highlight what the market moves were like today. Nifty has ended the day above the 24,600 mark, but still quite low when you take a look at Nifty. Remember, last Thursday we had an exemplary expiry session coming in, wherein we saw gains of more than 1% on the Nifty. We've reversed all of that today, and it's an 0.8% cut coming in on the Nifty. 24,610 thereabouts is where we've barely held on to 24,600 for the Nifty. Sensex 2 in tandem, 0.8% cut coming in, very close to that 81,000 mark, but albeit we've closed under that. India weeks lower by 1.6%, so at least looking good on that front. Nifty Bank has seen a recovery from the day's lowest point, but nonetheless a 0.3% cut coming in on that front. Surprisingly, IndusInd Bank is the top Nifty gainer in today's trade despite weak set of numbers, weak management commentary, another fraud or rather accounting error of 173 crore rupees that was discovered. Despite all of this, and multiple downgrades coming in across the board from brokerages, IndusInd continues to be the top gainer for Nifty. JSW Steel, Bajaj Auto, Bharti Airtel select gainers from the Nifty 50 pack. On the flip side, deep cuts from ONGC, M&M, Hindalco, Wipro, Trent, Bajaj Finserv, Power Grid. That list goes on and on because you had a lot of stocks that were in the red in today's trading session. The broader end of the market too did not do all that much in today's trading session. Nifty mid-cap lower by 0.5%. Nifty small cap also in tandem, but a slight bit of a lesser cut coming in over there. 0.2% cut coming in on the small cap index. In terms of sectoral moves, you had Nifty Media, that was the only sector that was in the green and was gaining all throughout the day. Other than that, on the flip side, Nifty FMCG was your big loser, led lower by Marico, ITC. You had HUL, Nestle, all of these stocks were in the red, followed by IT, Auto, Pharma, Energy, PSU banks, Realty banks, and Metal. That's the list and the pecking order of most to least losing sectors in today's trading session. Other than that, Interglobe Aviation was a stock to watch out for. That stock was up and away on the back of a good set of numbers coming in, but that stock took a little bit of a hit on the back of some cautious management commentary coming ahead. Nalco shown in today's trading session because the PAT has doubled on a year-on-year basis. Margins look healthy in Q4. On the flip side, ONGC slipped, profits were missed. ABFRL split of that business into ABLBL was another newsmaker in today's trade. Our 18 now exclusive, where we told you that semi-circular is expected on weekly expiry, so that is expected soon. And SEBI chair also gave a comment earlier in the day where they are resolving the NSE IPO issue soon as well. Lots has happened over the course of the day, but let's now connect with Vikas Jain, Head of Research at Reliance Securities, to make sense of the moves that we have seen in today's trading session. And Vikas, hi, welcome to the show. That's exactly my question to you first. Remember last Thursday, the market was really cheery. We were chirpy about a 1% gain on the index that we had seen last expiry. Today, it's been the complete opposite picture. Quite the steep cut coming in across the board. And we have been consolidating over the past few sessions. Do you believe that now, after this cut that we've seen today, this could mark the end of the consolidation and now we could see some improvement? Or do you believe that the near term continues to be subdued for our markets?
Look at the consolidation would continue because per se the upside has been pretty capped near to 25,200 levels. So we tested that particular range on the higher side. We tested the 20-day average 24,450, 24,400 on the downside twice. So we expect this consolidation to move ahead even in the next week also. So next week we could have a breakout maybe on Tuesday when the Sensex weekly expiry spans through, or on Thursday, because that would be a volatile week with respect to the rollover movement in individual sectors and stocks. And as this May expiry was been pretty large with 5-week expiries, so volatility would remain. We would expect some amount of consolidation over the next few days, and then volatility would prevail. If 24,400 is breached on the downside, then we could see some amount of resumption of corrective trend. Otherwise, the broader market looks attractive.
As you pointed out, then let me ask you this: what would your picks be?
So we look at two stocks looks interesting. We would continue with Bharat Forge from the defense space, the private sector defense space. The stock has done pretty well over the past few weeks, but we believe the action would continue to remain in the name. The stock has just retraced 40-50 rupees from its recent high of 1250, 1280 odd levels, 1280 odd levels. So that gives an interesting opportunity. So we like to recommend Bharat Forge at current levels with a target of around 1320 and a stop loss of around 1210 to 1190 odd. The second stock we like is Astral Limited. The current stock was completely oversold. The stock has witnessed some amount of rebound action in today's trade with strong set of numbers. The stock is medium term averages, so Astral looks limited attractive with a target of 1590 and stop loss of 1380.
So much for joining us. Astral and Bharat Forge looking good to Vikas as a stock-specific recommendations. But let's keep it going with the stocks that were in focus today. And Shrishti is joining us to highlight two of these stocks on the charts and the patterns that she's observing. Shrishti, take it away.
Well, so two counters today, one on the breakout side and the other one on the breakdown side. Firstly, let's have the breakout stock on the charts because this is GAIL India. Even in this market, the stock was actually holding on to some bit of a gains. And what we can see in this chart is the trend for GAIL India is actually changing. What you can see is that the stock was under tremendous pressure over the second half of the fiscal, but now is seeing a recovery. And this 20-day moving average trend line is suggesting that the trend has not just changed, but in today's trading session, the stock actually managed to take a support at its 20-day moving average, moving higher and almost making a bullish engulfing candle as well on the technical front. So this is the first stock, GAIL India, once again retesting its key resistance level. But other than that, on the breakdown side, the stock that we have got is Paytm, because yes, of course, the stock was in the uptrend, then it was in the declining trend, and this was the move that we have been tracking, but now is seeing a bit of a plateauing move. For the past 3 days, the stock has been declining in trade. But for today, why did we take this stock? Because this rejection has exactly come from its 20-day moving average. When we look at the derivative data, we have witnessed some bit of a shorts getting added into the system, and hence we would like to spot the stock, or rather highlight this stock as a breakdown one. So these are the two stocks. Back to you guys.
Thank you, Shrishti, for all those details. But for the moment, we leave the conversation at that and shifting our focus. A. Balasubramanya, Managing Director and CEO, Aditya Birla Sun Life AMC, sees lesser impact of tariffs on India. In fact, he also believes that India's economy is doing well and its fiscal is in a sweet spot. Why does he think so? Let's listen in.
Economies like India, the whole tariff thing, I think we seem to have managing it quite well, and the impact on India is going to be relatively less. And I think Indian economy is doing well. I think first time I am seeing the last number of years, fiscal, we are in a sweet spot. Indian fiscal is sweet spot. Tax collections have been very good. GST collections have been roaring. If the companies are not doing well, if the consumers are not buying anything, why would GST collections will go up? Therefore, there is a implicit the impact that we should see on the momentum and the earnings coming back as we move forward.
Okay, so that's the take coming in from A. Bala, who joins us in the studio earlier in the day, and that was his expert view on where the market is headed. But let's shift focus to some stock-specific action and focusing on IndusInd Bank. Surprisingly, the top Nifty gainer today, because it's been a howler of a quarter for IndusInd Bank, largely on expected lines with a loss of over 2,300 crore rupees. But even without the accounting hit and the discrepancies priced in, analysts say that this was a weak quarter for the private bank. The chairman also said that the bank is hoping to start FY26 on the clean slate. Gaurav is joining us with all of those highlights. Gaurav.
Well, yes, when we talk about IndusInd Bank, a very weak set of numbers is what we have seen from the bank, and the reason being that there were multiple one-offs, and these are the one-offs which were known as well as unknown. Let's not forget that yesterday only before the call, bank said that there is another discrepancy of around 173 crore rupees, which they also flagged as a fraud. So first, let's go through the numbers. When we talk about interest income, that has gone down almost by 12% on a year-on-year basis, whereas when we talk about net interest income, that has gone down almost by 43% on a year-on-year basis. There are three major numbers that were crunched in as one-off discrepancies. So first is that 760 crore rupees, which was impacted because of the reclassification of interest income to other income. Second was that incorrect recording of interest income of around 674 crore rupees in MFI section. And third is the reversal of 178 crore rupees from interest income because of the higher slippages that bank reported in Q4 FY25. Other than that, when we talk about excluding one-off, management said that the net interest income would have been at around 4,700 crore rupees. But other than that, as a result of these impacts, the net interest margins have gone down to around 2.25%, which is a decline of around 170 basis points on a sequential basis. On the other hand, when we talk about PPOP, which is pre-provisional operating profit, bank actually reported losses here. The loss number stands at around 491 crore rupees. And when we talk about this estimate that was actually the street was expecting this number to come positive. There was another one-off impact that bank has reported as around 1960 crore rupees, as we already knew, in other income, and that is the reason why when we talk about PPOP we have seen this kind of losses. When we talk about fresh slippages, now bank has said that they are recording new slippages in the MFI segment because there was some discrepancy, and as a result when we talk about slippages, that number has also gone up. And when we talk about the profitability, now the bank has reported losses of around 2,300 crore rupees versus what it was estimated as a loss of around 300 crore rupees. Now let's also not forget that bank has also exhausted all its contingency buffers of around 1,300 crore rupees. So definitely a very weak set of numbers is what we have seen from the bank. Although when we talk about management commentary, they have said that in FY26 they will start with a clean slate and all the one-offs have been already discovered and booked. But at the same time, these discrepancies is something which questions the bank's overall accounting policy, and definitely on the back of this we will be watching out on what happens to IndusInd Bank today.
All right, that is of course the big question, what happens to IndusInd Bank, and in its con call mentioned that all issues related to discrepancies are duly identified and addressed. But like I said, what's next for the bank? Will RBI take further action? What is the promoter group saying? Ankur in fact joins to answer all these questions. Let's listen in.
Yes, after IndusInd Bank has reported its Q4 earnings, the bigger question remains what happens next to IndusInd Bank. We understand that the bank is going to report the fraud matter to either regulator or investigative agencies because the bank has now found that there was not just process lapse, but a fraud has happened against the bank. There is likely involvement of employees of the bank in it, and the bank has clearly mentioned that it has suspected occurrence of fraud against the bank, not just irregularity. Now the total accounting discrepancy is pegged around 1,269 crore in FY25, but more importantly now it is up to regulator on what action it takes. Sources have informed us that RBI is keeping a close eye on IndusInd Bank regarding the matter because it is also awaiting what happens to the names of CEOs which is yet to reach the door of Reserve Bank of India. Remember, the bank has clearly mentioned that it is in process of finalizing its successor and these names are likely to be sent before 30th June, which is the deadline of finalizing those names. Apart from that, we also know that the oversight committee is what actually running the show under the leadership of Sunil Mehta, and already the global executive firms is in process of finalizing the names, but we understand that it is going to be the outside candidate for the name of CEO of IndusInd Bank. But more importantly, even after the clarification, even after the Q4 earnings conference, there are more questions than answer for the bank.
Absolutely, Ankur, what a way to sum it up. More questions coming in for that bank than the answers that they're providing to the street right now. But clearly the street sentiment is not reflecting that, because almost a 2% gain is what we've seen on that stock today. But rather than IndusInd Bank, which was some of the newsmakers from the broader end of the market, Rabinder is joining us with that list.
Well, as Guardian Ridge Shipbuilder is in focus, our company has become the lowest L1 bidder for construction of NGC for Indian Navy, and the L1 bidder will be awarded 5 NGC ship at likely value of more than 25,000 crore. Moving to next, on back of Q4 earning, Vartech is also in focus, where company has reported its Q4 number, and company reported revenue at rupees 1156 crore, which saw a 24% uptick year-on-year basis. And if we talk about PAT, then PAT also saw a good uptick of 38% year-on-year basis from 72 crore to 99 crore, whereas EBITDA margin was saw a slight decline of almost 20 basis points from 12.4% to 12.2%. Moving to next, Colgate is also in focus on back of Q4 earning, where company reports a Q4 number, and company's Q4 number was mixed and revenue misses street estimate, and management commentary is also weak. So back of this, Colgate is also in focus, and apart from this, Gulf Oil is focus, where company has also reported its Q4 number, and company's Q4 number was weak, which was below the street estimate. and if standalone PAT was down by 6.5% quarter-on-quarter basis. And lastly, Stride Pharma 2 is also in focus on Q4 earning, where company reported revenue at rupees 1190 crore as compared to 1043 crore year-on-year basis, and PAT also saw good uptick from 10 crore to 86 crore year-on-year basis. Whereas if we talk about EBITDA margin, then EBITDA margin saw a slight decline from 19.6% to 18.2%. So back of this Q4 earning, Stride Pharma is also in focus.
Thank you for those details, but for the moment, let's shift our focus. After posting a good set of Q4 earnings, we caught up with Brajendra Pratap Singh, Chairman cum Managing Director, NALCO, on his guidance for financial year 2026. But what is he expecting in terms of revenue and margin? Let's listen.
We are expecting that alumina prices will be at the level of around $400 to $450, and LME will be around 2,500. LME will be there. So the benefit which we got last year due to the increase in alumina prices will not be there this year. But yes, this year we are focusing more on increasing our volumes. First, that is we will be increasing our alumina production by around 2 lakh tons, by increasing the aluminum production by 10,000 tons. We are banking on increasing our efficiency and reducing our cost. These three things will drive our profitability, and this year we are expecting around somewhere 15,000 crores of revenue generation will be there. In this current financial year, we are aiming to have a EBITDA margin of around 36 to 37%. Whatever our annual plans are there, just few months back we have an annual plan in which we have fixed up our production targets, our cost, our efficiencies, our specifics. In that we are expecting that we will be having a EBITDA margin of 36 to 37%.
Okay, well, so that's the word coming in from the management of NALCO, but let's also go across and listen into the management of Astral and what they had to tell us about their earnings, because polymer price-led growth is expected in FY26. That's the word we got from Hiranand Savlani, the ED and CFO at Astral. Listen into what else he had to say about the anti-dumping duty and tariffs.
2-3 things are there which can drive the market in FY26. Number one thing, polymer price. If the polymer price start inching up, the dealer and distributor which are completely destocked right now sitting with a very lean inventory, that will drive them to restock that inventory. That itself is going to give the reasonably high growth to the industry. Secondly, two burning issues are going on in the industry. One is the BIS. If the government is able to implement the BIS standard, then a lot of unorganized players are going to suffer, and a lot of this dumping of Chinese raw material in India will stop. So that is also going to drive big way to the organized player. Secondly, anti-dumping duty issue is also there on the card. We are expecting that the government may take any time that decision. I think our export contribution is hardly anything, hardly 1.5% kind of level, which is insignificant to our total top line. So we don't see any effect going to be there on the tariff on our company. These two things are there on the radar of the government. So when the decision is taken on these two, the polymer prices are going to go up by 10-15%. That will help the industry to the realization and the profitability.
Shifting focus, despite the PAN 2.0 project setback, Protein Gov will continue to invest in new projects. Now, that's the word coming in from MD and CEO Surish Sethi. He also shares their growth roadmap.
PAN 2.0 as an RFP is where I'm saying we did not pencil in any growth from that in our projections. And again, that is where the ambiguity came with the market. Where we are clearly stating that our growth plans remains stable as they are. Already have mandates in the space of agriculture, health, education, digital commerce and transport and mobility with ONDC. So that's another vertical which is growing for us. Core businesses continue to show growth and are stable, and there is no impact of this particular RFP win or loss. And likewise, the new businesses, we are on track to show whatever we have been discussing earlier, and they are on track for us.
Okay, that's the word coming in from the management of Protein eGov. But let's move on and talk about the ABFRL demerger. That stock was in focus today. Remember, today was the spin-off, the record date for the spin-off of ABFRL into ABFRL, as well as ABLB, which is their AB Fashion and AB Lifestyle brands arm. Now, on the back of that, remember when the adjustment happened, Aditya Birla Fashion and Retail opened at a price of 97 but closed at 90 thereabouts, an 8% cut coming in on that front. It was a sharp knock on that front as well. Other than that, to help you understand what this demerger looked like going ahead, for ABFRL, they are going to be a debt-free company and they're going to be a dividend distributing company. For ABFRL, going ahead, they shall house Pantaloons, Ethnic, Luxury Retail and Digital First Brand, TMRW, and also designer-led brands like Shantanu and Nikhil, Sabyasachi, House of Masaba and Tarun Tahilani. For ABLBL, which is the newly demerged company, and a listing is expected to happen soon, they will be housing Madura Fashion, Louis Philippe, American Eagle and Reebok. And upon demerger, this company is going to be having a debt of 700 crores, which the company expects to pay over the next 2 to 3 years. Let's also go across and listen in to the rationale behind this demerger and a better sense of what the financials could look like for the company going ahead from Jignanshu Gore from Bernstein, who joined us earlier in the day to help make sense of this spin-off.
The thesis behind creating two different entities was because they are companies which have two different objectives and they need two different strategies and hence possibly two different sets of investors who would be interested in investing there. We think that strategy is not necessarily playing out by itself, but the individual companies will need to demonstrate growth in order for re-rating. And we thought that the price is not depressed only because of different ownership, but it's also because fundamentally they have not performed as much as some of the peers in the industry have. So our expectation is the corporate value creation for shareholders will not be automatic just because of the demerger and corporate action. It will have to follow performance improvement in their individual companies, which we watch very closely as over the next few quarters. One potential way is adding distribution network because their presence is can be sort of extended beyond where they are. But again, structurally, I think it's going to be challenging for them to bring back growth for a very long duration.
Going on, the government has announced its roadmap for coal production in the current fiscal. In fact, the coal ministry will seek cabinet approval to establish a coal trading exchange. Prakash Priyadarshi joins in with the details.
The government has come out with the action plan for coal sector for FY26. That's an important development coming in. In fact, the coal ministry has set a coal production target of 1,150 million ton for FY26, out of which Coal India will be producing around 875 million ton of coal during current financial year. Some important development on coal trading exchange as well, where coal ministry is likely to seek cabinet approval for setting up a coal trading exchange across the country. That's an important development coming in. In fact, the inter-ministerial consultation is already underway. Further amendments will be made to the MMDR Act 1957 to implement this plan. When it comes to coal auction under commercial coal mining, target has been set to auction at least 25 coal mines during current financial year. In fact, India will also be commissioning one coking coal washery with 2 million ton capacity by the end of 2025. CIL and its subsidiaries have set capex target of rupees 22,778 crore for FY26, and coal demand projection will also be announced for FY26 to FY30 to facilitate better planning.
Okay, Prakash, thanks so much for taking us through all of those details. But on that note, we'll wrap it up on this edition of Your Trade. It's a goodbye from Nivedna, me and the team that put this show together. Stay tuned to ET Now for more news and updates.